Let's take a look at some movers right now. Dick's Sporting Goods beating on the top and bottom line. The retailer announcing a more than doubling in its dividend over the company's previous quarterly per share amount. The shares are going higher here this morning. You see there the beat on the top and bottom line. The company's comparable sales up 5.3% in the quarter. It's also out with a forecast, by the way. It says for the full year, earnings per share are going to be $12.90 to $13.80. Analysts had been looking for $12.03. So obviously that's a lot better than estimated. The company's gross margin is still maybe feeling a little bit of pressure. Gross margin at 32.4%. That is down significantly from 37.6% a year earlier. The CEO does say, Lauren Hobart says, the company is trying to get its inventory in order. That's something we've been hearing from a lot of retailers. And she said inventory is in great shape as we start 2023. So we'll see if they start to see that margin rebound as a result of that.
This is a company that, at least judging by the stock price, has really been executing. I've been following them over the last year or two. If we could go to the Wi-Fi Interactive, I have a couple of interesting charts here. This is our retail landscape, our heat map over 3 years. I'm going to sort by performance, and you're going to see Dick's in the upper left here. So it's number 3, up 277%. Just want to show you a chart. Let's take a 10-year chart here, and you can see it got a real huge lift early in the pandemic. And unlike a lot of its competitors, especially with all the stories about the death of the mall, was able to maintain a lot of those gains. Now, this is a 50% correction. It's steep, but not the 90% you saw in others. And this is a comparison chart between Dick's and Bed Bath & Beyond. Bed Bath & Beyond, definitely one of the post-pandemic and post-pandemic losers here. Lots of terrible execution stories from the latter, and you can see the divergence. So Bed Bath & Beyond peaked in the meme days of early 2021, and Dick's Sporting Goods peaked with the general market later that year. Like most stocks, it did fall off about 50%, but you can see it is knocking on the door of those record highs reached only a year and a half ago or so. So from the charting perspective, this is an impressive story here.
Yeah, I mean, what's interesting too is not only has Dick's outperformed other retailers in that sense, it's also outperformed the market overall.
Yes,
in terms of
big time.
In terms of getting close to reattaining its prior highs. So it really is quite unusual to see in this market, to see something like this. Now, you know, whether it's going to keep going that way, we've had some discussions on the show, Jared, about maybe not finding enough salespeople on the floor. From an anecdotal perspective, Brian Sazzi and I have had some chats about that. But
enter artificial intelligence, problem solved, Julie.
I guess so. Maybe they can help my son figure out what kind of bat he needs the next time I go if I can't find an actual human.
If ChatGPT has nothing to say on it, I would be surprised.